In this video, we're going to take a look at the future analysis to get you prepared for the week ahead. So we're taking a look at gold, silver, and GBP-USD. If you love the content, please like and leave your thoughts in the comment section down below. So starting with the gold chart on a 1 hour time frame, what we can see here is a simple consolidation, right? So we have gold ranging between these highs and these lows. So last week, I anticipated a movement to the upside after taking out this trend line, right? So this these lower highs. So after taking out these lower highs, I expected a movement to the upside in continuation of the bullish trend we have on gold. So that's partly because of the geopolitical tension in the Middle East. So usually when we have situations like this, when we have wars and indecision in the markets, especially when we talk about energy like the crude oil, we tend to see gold rally higher, right? We tend to see gold move significantly higher. So this massive move we had on gold over the past 2 years has mostly been foiled by the uncertainty in the market because of the wars we've had with Russia and Ukraine, with Israel and Palestine and all that, right? So now with the US intensifying the war in Iran, I've expected the price of gold to even rally higher, but that hasn't been the case. But I think this is partly because the DXY has also been making a significant move to the upside lately, right? So for now, we're not out of the woods yet, so I wouldn't say the trend or the bullish trend of gold has ended. But what I can say is we are currently in a range, and what we do this week is simply wait for the right moment to either go long or go short, because you can either go long or go short in these market conditions, right? But for me, I'm leaning more towards going long because the trend is still bullish in my opinion. So I haven't seen any reason yet to conclude that the bullish trend on gold has ended, right? So for me this week, we're currently trading around a significant area of support. So we have an area of value here. So nice liquidity over here. You can see the rejection came here the first time, another rejection here. So this week, market may open with a gap or not, but it's very, very uncertain right now to determine what's going to happen when the market opens. But if we do get rejected around this area of value to the upside, then it means this area of liquidity is still valid, right? But for now, I do think if we lose this area of support, then we will likely gonna head into this area of value here before we go higher, right? So for me, I'm looking at this area here to go long because I believe this is where we're going to get our deep value zone. So this is known as a deep value zone because if price falls through this area of support, we get the best price to go long, yeah, right? Because now I think this will be an extended discounted price, and that would mean the RSI are getting extremely oversold, right? So a move into this area of value. So my bullish case scenario will be waiting for a move into this area of value. Then I look for a confirmation to go long, right? So this confirmation will be rejection from this area of value, giving us a higher low, and I go long after the higher low, right? So this would mean entering here like this. If something like this happens, stop loss is going to be underneath the bounce off of this area of value. Then I write my positions to go higher. So first target obviously is going to be around this first area of value here. Second one is going to be around this area of resistance, and I trail the rest of my positions as we go higher, right? So that's it briefly for my bullish case scenario on gold. So for now, it is extremely difficult to tell when to go short because so many uncertainty with the geopolitical tension right now in the Middle East. So price could turn around at any point. So we may not even get into that devalue zone. We may come all the way down slightly like this, then rally higher, right? Because there's still an active threat in the Middle East, and in times of wars, gold tends to rally. But for now, we're going to treat it as it goes. But if you want to go short, to cash quick trades, you could watch out for something like this and a move up. So something like a consolidation like this. Then if we get a bearish breakout from this consolidation, then you could go long for a quick trade, like one entry there and stop loss above the consolidation this breakout, and you can aim for this area of value here as your take profit, right? But for me, this is extremely risky. But if you want to do that, if you want to go short, this is exactly how I would go short, waiting for a consolidation followed by a bearish breakout from that consolidation in continuation of the bearish move we've had to the downside, right? So you can see right now we form lower high, so one high, lower high. So if we do get a consolidation that leads to another lower high followed by a bearish breakout, then that could very much give you a confirmation to go short, aiming for this lower price target over here, right? So this, if you also pull up a trend line like this, for example, this could also be retesting that trend line, right? So this consolidation, so for better confirmation, if you get a move to the downside, for example, and you get this consolidation all the way to testing this trend line, then dumping, then this could give you that confirmation to go short, aiming for this price level where we look for opportunities then to go long, right? So the only way to go short right now is waiting for a consolidation around this price level or watching out to see what price does around this level, then going short after the consolidation and breakout on this level, aiming for these lows. And to go long, first, I'm going to watch out to see if price goes into this level, then gives me a confirmation by creating higher low, then going higher, right? So I'm going to go long here, tighter stop loss, and ride my position to go higher. So if I miss this one over here, then taking out this trend line could be another opportunity to go long. Meanwhile, when that time comes, we're going to do another review before we decide how to approach the market then, right? So this is briefly for gold. It's going to be a week of patience, in my opinion, because you don't want to jump in on the buy trade over here because this is a good support, right? But you don't want to jump in on the buy trade over here because of the uncertainty in the Middle East, as I said earlier, right? Because there's a good chance we go lower before going higher. And if we do go lower, you would have been missing out on an opportunity to go long at these premium prices before going higher. That's if you enter too early, right? Because we have some level of liquidity around these price levels, and if this this support level fails to hold, then we may dip into this area of liquidity, area of value before we go higher, right? That's it briefly for gold. Moving on, we're talking about silver. So silver, similar to what we have on gold, but for me, I wouldn't be going short at all. So this is a 4 hours time frame on silver. For me, I wouldn't be going short at all. I'm simply going to wait to see if we come into this area of value. If we come here, get a confirmation, then I'm going to go long, right? With a tighter risk to reward ratio because we have a good area of value here. So this would also mean price coming into the oversold level, right? So another confirmation to solidify my thesis to go long would be pulling up the moving averages and going to the 12 hours time frame. So on the 12-hour time frame, you can see we have these moving averages, 200 EMA, 200 SMA, acting as a very nice area of support around this area of liquidity. So if we do come into this level, I may just go aggressively, right? Or I may wait for that confirmation, right? So my confirmation would be creating a higher low. So a bounce, creating higher low, and a move to the upside. That would be my confirmation to go long. So this, I think, probably the best trade for the week if this indeed does happen, right? So especially, for example, if we get a gap to the downside briefly, tapping into the short value, I may jump in immediately, waiting for that move to the upside, right? Because I do think gold and silver are not done yet with their bullish rally as long as there's tension in the Middle East, right? So a movement to this area of value, which coincides with the moving averages on the 12 hours time frame, so 200 EMA, 200 SMA, followed by confirmation of higher lows formation or a move up retesting these lows, that would be my confirmation to go long, right? So entry is going to be here, stop loss underneath the consolidation list of the breakout, and take profit targets could be as high as current price level or even as high as this price level here or this price level here, right? So if you want to be more conservative, right, if you want to be more conservative, more patient, then you'll be waiting for a decent amount of time, right? But to go long conservatively would mean waiting for price to come into this area of value, consolidating and watching to see what price does, and probably breaking out from this trend line. So if we take out this trend line, then this should be your confirmation to go long. So you can go long after we take out the trend line. Stop loss can be placed underneath the consolidation list of the breakout, right? So something like this. Then first take profit target can be placed around these highs while you trade the rest of the positions as we go higher. So for now, all eyes on silver for me, because this is the best and most clear trade opportunity for this week, in my opinion, right now, right? Unlike gold, which doesn't have the moving average aligned with this area of value. So this one aligns perfectly. And on the 4 hours time frame, like I said earlier, if we do get price moving into this area of value, then that would mean price being oversold on the 4 hours time frame, which will be a decent opportunity to go long, in my opinion. Lastly, we're talking about GBP-USD. So GBP-USD on a daily time frame first. We're starting with this time frame. You can see we've had higher highs, higher lows on the daily. And I do think there's a good chance we come back to touch this trend line. Right now, the trend line coincides with this area of value, right? The area of liquidity. So if we do come here like this, this would be an opportunity to go long, in line with the trend on the daily, right? So on the daily, this current trend is still active, still bullish. But if we get a double bottom here, that's just going to be a brilliant trade opportunity to go long, right? So I'm going to show you how we could possibly take a short position on our way down to this area of value, right? So going to the 4 hours time frame. So let's start with 4 hours time frame, or let's see 1 hour time frame, for example. What you want to watch out for is this. So on a 1 hour time frame, it's clear that we have a downtrend, right? So we have price creating lower highs, lower lows, and our target is aiming for this area of value where we possibly create a double bottom, right? To go short, you want to see price coming a little downward. If it does, then it grinds to the upside, grabbing liquidity from this area of value. So if we do that, then a confirmation could be waiting for a bullish engulfing candle that will give you a confirmation to go short, right, in line with the current trend. So this gives you a better risk to reward ratio, right? So this is what I'm watching out for. So I'm going to watch out for this area of value, right, to look for an opportunity to go short from if we do get that reversal. So similar to what happened here. So we had this move to the downside. You can see we had a slow grind to the upside, grab liquidity from this gap, then we dumped, right? So over here we have an area of liquidity over here, right? Because you can see the choppy movement. It was really from this price level we had those massive bearish candlestick going to the downside. So I do think there's some level of liquidity here that could lead to price climbing higher to go grab that liquidity, and if that happens, then you wait for confirmation. Confirmation could be price creating lower highs or a bearish engulfing candle. So bearish engulfing candles are usually strongest reversal candlesticks in my opinion. So that's why I'm watching out for those before I go short. So if that happens, then you want to go short after the confirmation of a reversal. Stop loss can be placed above that area of retest, and you can aim for these lows as your first take profit target, while you hold the rest of positions as we go lower into this deep value zone, right? So conversely, when you get into this level, then we look for opportunity. I don't want to go into going long right now because I think it's going to get to probably next week before we think about going long, in which case we're going to make another video, right? So for now, the best thing to watch out for is an opportunity to go short, and that could mean waiting for price to reverse back into this area of value, look for opportunity to go short and ride the trend. The reason why I'm watching for that is because we've had similar price movements in the past, right? You can see movement to the downside, reversal, grabs liquidity, down, reversal, grabs liquidity, down, reversal, grabs liquidity by closing this gap, down. So there's a good chance we go up again, grab liquidity, and then go back down. So there's no telling how long this is going to form, but just be patient enough to wait for those reversals, then look for opportunities to go short. So that's it briefly for this week's analysis. If you love the content, please leave your thoughts in the comment section, and let me know what you think about this week's analysis, right? Let me know what you'll be trading in the comment section down below. And if you haven't gotten my free chart pattern playbook yet, use the link below to get a link. It's totally free, to get a book. It's totally free. And if you want to learn my complete price action trading system, also use the link below to get that system. It's going to improve your trade results dramatically. That's it from me guys this week. See you next week.